Well, if you like triangles, you might really like rectangles. And rectangles, like triangles, are a trading range that are bounded by a support line on the bottom and a resistance line at the top. However, instead of like converging, it's more running parallel, forming the shape of a rectangle, as you'll see. And they'll continue along that kind of path, which gives us a lot of good trading opportunities inside the path until there's a breakout of the rectangle. Now you might say to yourself, well, which way does it break? Does it have a tendency to go a certain way, whether it's going to break through a support line or resistance line? The answer to that, because it's a continuation pattern, is it's going to follow the direction of that previous trend. See how continuation patterns will follow the original trend compared to, let's say, reversal patterns. But rectangles are by nature a continuation pattern. So we'll be watching those trends and that overall direction of prices, either up or down, and then we'll see how the triangle, or excuse me, the rectangle forms, and then we'll see how we can maybe trade around that. So if you look towards the middle of the chart and think about those support line at the bottom and a resistance line at the top, if you were to draw those two lines, and form a rectangle, just visually look at this for a moment. What might it look like on your chart? Where about where you'd be drawing it on there? Think connecting the highs and the highs together, maybe at the top, and lows to lows with horizontal lines. So if you saw something looked like something like this, well, terrific, you were right. If not, that's okay too. We're learning here. That's the whole idea. I just want to give you a little kind of mini idea as we're going here. And you can see in this particular rectangle pattern that there's an uptrend that we're entering into the rectangle into. So in this case, there's a continuation pattern, so it'd be a definite direction, which was this uptrend. But then it gets kind of in this narrow trading range of resistance and support lines. It goes up and bounces at a resistance line, which can't push the prices higher. The buyers or the bulls can't push the prices higher, so prices come back down. But a new trend doesn't form. It doesn't turn into a downtrend. It basically stops at that support line and then turns around and starts going back up towards the resistance line, and so on, trading in this range. And how wide the distance between the resistance line and the support line will vary by the security and at that moment of time. Sometimes they can be very, very narrow. Sometimes they can be much wider, of course. So it's not so much the idea of how wide or narrow it is. It's more that it's actually formed this rectangular pattern. And if we look at that, you can say, oh, well, there's opportunities where I might want to buy, or there's opportunities where I might want to sell within a rectangle pattern. And that's true. We want to make sure that the pattern has fully formed. So again, we're looking to buy in at the number 2 or 3 touch of it. You could buy in, let's say, you can see the first touch there. I don't have an arrow there. The second touch, I don't have an arrow there too, though a lot of people will buy in the second touch at that support line. A real good confirming way is to buy in at that third line. You can put in a buy number 1. And then you can wait for it to come back down. It's either going to break through that resistance line at the top and keep going, but if it turns around, there's a really good chance it's going to bounce again off that support line. So once it comes back down, if you're a little bit later or seeing this later or want to be more sure, you could buy at the number 2 position here. So you can buy in the second, third, or fourth touch. If you're looking to sell the security, one thing you can do is do a lot of trading instead of waiting for the trend to go back in a certain direction. You could just trade frequently within the rectangle. So every time it comes up to a resistance line, that's where I'm selling. So I would be buying, let's say, at the support lines, let it have its run up, sell it to take my profits, let it come back down. Right now I'm out of the security. Once it gets down back to that support line and rectangle holds, I'll buy it again, and then kind of repeat that until it breaks through as far as breaking the pattern. But until then, what a nice trading opportunity to trade frequently as far as buying and selling inside the rectangular pattern. All right, so let's say in our rectangle here, where do you think the price will go next, right? I mean, we're now at the top, we're at a resistance line. It could either break through the resistance line and go, basically go upwards, to where I've labeled letter A, or it could turn back around and go to letter B. Now, we don't really know, but if you were to guess, maybe you'd have an idea of a guess around that. Guessing is not something we want to do in technical analysis, by the way. But when we're looking at a chart pattern for fun, you can kind of think about which way it might go. And how you can really help confirm that when you reach, let's say, the top or either resistance line or support line is look at your other indicators to help confirm things around volume, moving average, relative strength index, things that you're learning in the course, where it'll also give an indication of like, oh, this is a buy opportunity or a sell opportunity. So use those other indicators to help confirm that you'll learn in the course what might happen here. But let's say I told you it was either going to break either through resistance line A, or it was going to turn around and go all the way down and break through the support line B. Just based on what you see here, which one do you think it is? I'm not giving you any other indicators. You just got to go with the pattern here. I'm just telling you it's going to do one or the other because I'm the instructor and I'm having fun, and hopefully you are too, right? Which one do you think it is? Now, a little hint here, rectangles are trend continuation patterns. What was the trend coming into the rectangle? So if you thought, okay, I'm in an upward trend, so I'm going to say A, well, you would be correct, because that is, the uptrend was already established before. The uptrend then went into this rectangular up and down pattern. And if it was going to break through, we'll be watching for it to more likely break through on the letter A there, break through that resistance line and continue our uptrend. So that you can see that if we're, say, buying at the support lines, and even if we're doing frequent trading within the rectangle, because I bought at that support line, once it approaches that resistance line, if it turns back away from the resistance line, I could sell, get out, and then do it all over again at the support line. Or, since I've already bought at a support line, I could buy again, or if I've held it through this whole period, by the way, too, and I bought it way back when, on that uptrend, I could then hold on to it and wait for it to break through that resistance line and continue the uptrend going upwards is the idea. Now, if it was a downtrend, it'd be the exact opposite, right? So, just think of this rectangle and just the line on the left there flipped, where we a downtrend, and it would break through B, break through the support level, and continue the downtrend. And you adjust your trading accordingly. Now, sometimes rectangles will have that same, parallel move between the upper and the lower, the support or the resistance line and the support line. And the key is they're not converging. They're moving parallel together, but they don't necessarily always look on their side like in a sideways market. Sometimes they can trade on an angle or on a slope, either kind of continuing that uptrend or continuing that downtrend. Even with inside that, it's got some movement inside there, and that would be what we call a channel. It's really a rectangle, and there's a channel of prices that are happening. But the idea is it's not converging like a triangle. It's still this narrower trading range, and then to treat it appropriately as a rectangle. Again, triangles and rectangles, continuation patterns, trend is your friend. The idea is you're going to watch for them to go through. If they do break through, they're going to go in that same direction of the original trend. Nothing's perfect, of course. That's very important. But that's the idea of these chart patterns that have been proven over time. More likely than not, hopefully is the ideal continue that pattern.